Hello gentlemen, it's Gavetti here back with another video. In this video I just want to touch upon the Roth IRA. So obviously in previous videos I've talked about like my investment journey, investing into certain asset classes, but today specifically I just want to talk about the Roth IRA. Now for me, that was my first ever account I ever opened. It just made so much sense. I did my research. Basically, a Roth IRA allows you to contribute at any age. 18, of course, is the minimum age, as long as you have some type of income. And the best thing about the Roth IRA is that you can basically invest tax-free dollars, basically after-tax money you make. So if you make an income, side hustle income, 9 to 5 income, whatever income, you can invest that money, and it's tax-free growth because it's post because your money is being basically taxed after you've already made that money. So that's the great part about the Roth IRA. I opened up my Roth IRA at 21. The good thing about the Roth IRA is that there is a limit to how much you can invest, which is 7,000. That is a lot of money to invest in the year, but it doesn't limit you to also invest into like 401ks if your employer offers you that. Also traditional IRAs as well, or any type of taxable brokerage accounts as well, which I have a couple myself. So I actually have two Roth IRAs. I have one with Fidelity and one with TD Ameritrade now, Charles Schwab. Main reason why is because in my Fidelity, I wanted to specifically invest into stocks only, which I do have also some exposure to, like a Vanguard ETF, VTI, which is the total stock market ETF, which is a great holding I have, and then also ticker SCHD, which is basically Charles Schwab's dividend growth ETF as well. But for the most part, my holdings in my Fidelity Roth IRA are individual stocks such as like Apple, Colgate, Caterpillar stock, Walmart, things of that nature. Now, I did extensive research even before I invested. I strictly invested into dividend stocks in my Fidelity Roth IRA. I also decided to contribute with at least one growth stock, which is Tesla. I have about 8 shares in Tesla. Bought in before the pre-stock split, so now I own like 8 shares at like 160 average price, and now it's at like 250. So I'm doing well in terms of that. In my Charles Schwab, though, it's completely different. I decided to do a mix of ETFs, index funds, and a little bit of bond exposure. Now, I am 24, so it's always wise to have some bond exposure. So I probably have about 2-3% in that, maybe 1 to 2% in that account. But the rest is like stocks, ETFs like VTI, SCHD, VMY, VTI, if I didn't already say that, QQQJ. So there's this whole list of ETFs that I have invested into that Charles Schwab account. Now for me, it's not too hard. What 7,000 divided by 2, 3,500 goes in one Roth IRA. The other one goes in another Roth IRA. Now I don't advise you to open up more than two, because then you have to really manage how much money you're contributing and check how much you've contributed for the year, and make sure you don't go over that 7,000 contribution limit. So that's very important. The also great part about it is that you can withdraw at any age without taxes or penalties, but you can only withdraw your contributions. You can't withdraw your earnings. You can only withdraw your contributions and earnings after the age of 59 and a half years old, and if you've owned the account for 5+ years. So if you're 53 and you open up your Roth IRA, and you wait 6 years, that's that 5 years minimum threshold. So that's pretty good. But for me, I don't plan on withdrawing. I plan on actually giving it to my beneficiaries, my kids, my family. That's also a great strategy with the Roth IRA, is that your beneficiaries, such as your kids, your spouse, whatever, can actually inherit that tax-free growth and compound interest on that account. So for me to open up mine at 21, I'm 24 now, that money that's invested into the stocks, into the ETFs, into the index funds, it's just going to grow tax-free for decades. And, you know, compound interest is the eighth wonder of the world. That's what Albert Einstein said. So why would I disrupt that? Why would I ever want to, you know, take out my contributions or even take out my earnings and contributions after 59 and a half? It doesn't make sense for me. So, you know, there's also another great strategy with the Roth IRA is that you can use something called the backdoor IRA conversion, which basically allows you to convert the funds to a traditional IRA. Now you can do that. I advise not to, but it is a great strategy to use as well as a Roth IRA owner. Also, what's pretty cool is that you don't have to just invest into stocks and ETFs and index funds. You can also invest into like real estate, REITs, bonds as well, like I mentioned. So you know, you have different combinations of how you want to, you know, actually invest your money in your Roth IRA. And that's the key, is you want to invest into those asset classes. Just because you contribute, you know, 3,500 in one account and the 35 in the other account, or if you contribute just 7,000 in one account, doesn't mean you actually invested. You have to place that buy button on like Apple stock, VTI, ticker VTI, ticker VYM. You have to actually buy something, you know, or sorry, my bond holding is BNB as well. So you actually have to invest. That's what a lot of beginner investors, no matter the age, you know, don't really do their research. They think just because they contribute the money that it's invested. No, there's been a lot of actually stories of people, you know, going at least a decade just contributing that amount, whether it be 6,500, 6,000 a couple years ago, because it goes up every $500 every year, which is pretty cool. So when I started investing at 21, it was 6,000 contribution limit. Then it went to 6,500, then 7,000, and it'll probably go to 7,500 next year, which is pretty good. You know, you want to see that increase. But they fail to actually invest their money. Please don't be that person. At least dump it into like a total stock market index fund, or ETF, or at least one stock. You know, have your money working for you. Don't just have it sit there in an account and think you're invested. That's the number one biggest mistake. Also, another pretty cool aspect of the Roth IRA is that there's no required minimum distribution, unlike a traditional, where I think at like the age of 72 or 73, you're required to actually withdraw funds. Now that's at 73, you know, that's basically past retirement, and you'll probably need that money in a traditional IRA to, you know, pay for your living at that age. Hopefully not, you know, depends on how you invest. But the great thing is that you can grow your money tax-free for as long as you want. And like I said, you can pass that on to your beneficiaries and have them inherit that tax-free growth, and they don't have to actually, technically, they don't have to actually, you know, require them to take out money. So that can grow, you know, forever long as they live. So if you, let's just say, God forbid, you die at 70 or 80, you pass that account along to your kids, they don't have to take out that money, and that money keeps compounding and compounding during their lifetime. So that is also a great strategy to utilize with the Roth IRA. So that's why it's such a great tool. I'm so fortunate to actually have done my research when I was about 18, 19 in college, and really just understand what the Roth IRA provided as an account and as a great wealth building tool. And like I said, you know, you can withdraw after 59 and a half. I'm not planning on doing that. You can withdraw your contributions and your earnings. I advise not to. It just doesn't make sense to disrupt that compound growth, especially if you already have like a 401k with your employer. Like, let's just say you have a 401k, you have a Roth IRA, you have an individual taxable account, which basically means, you know, the money you contribute is pre-tax, so you are going to be subjected to taxes, whatever level you're at, you know, in terms of income, in terms of your tax bracket at that age. But if you have those accounts, there's no need to interrupt the compound growth in your Roth IRA, because you'll have a 401k. Hopefully, you'll have other asset classes like, you know, if you're gold, commodities, silver, jewelry. Maybe watches, you like to collect watches, or art, or maybe real estate. That's also another big asset class that I'm going to get into in another video. So you want to have these different asset classes. You want to have a business as well, either online, brick and mortar, if you're, you know, we want to be an entrepreneur and be a business owner. So hopefully you have these different asset classes that you can maybe take the income and distribute to your wealth instead of disrupting that Roth IRA compounding tax-free growth. So that's basically it in a nutshell. Quick video about the Roth IRA. I advise anyone over the age of 18, even if you're working an internship, if you're working 2 jobs part-time, full-time, doesn't matter. Just start to contribute that max amount of 7,000. If you can't, the best thing about it is that you technically, when the year ends, you still have 4 months to catch up. So April of 2024, for example, or sorry, April of 2025, you still have about like a year and 4 months to still contribute that 7,000. So for me at this time, I've only invested, I think, close to 3,800. So I'm about what 20 no sorry I'm about 3,200 left that I have to still contribute, and that gives me, it's today's September 28th. So I have October, November, December, January, February, March, April. I have 7 more months to contribute that 3,800. Of course I expect to contribute the full 7,000, but I also, like I said, have a traditional IRA, I have a 401k, I have 2 individual tax brokerage accounts. So I also contribute to those as well. So that's why I haven't been able to get to that 7,000 yet, but I'll get there eventually. So there's so many benefits to having a Roth IRA. So I hopefully advise you, and I hopefully, I hope you actually do invest into a Roth IRA and take that next step in building your wealth. So, go over this video if you can, like, comment, and subscribe. What's your opinions on the Roth IRA? If you've opened up a Roth IRA, and if you're able to see the compound growth, because I see it every day. I see my money work for me every day. And not only that, I've invested into dividend-paying ETFs, index funds, and stocks that have literally every quarter or every month just build on my shares and continue to grow my money. It's great to see, and I'm glad I made that decision when I was at 21, because now I'll have 6 more years of my 20s, a whole decade of my 30s, a whole decade of my 40s, a whole decade of my 50s. And then if I want, at age 59 to distribute that money of my contributions and my earnings, but I definitely won't. So that's going to grow for 3 decades plus, tax-free, and compound and compound and compound. It's going to go from a little snowball when I was 21 to a bigger, snowball that'll turn into hopefully Mount Everest. You never know. So it's been Gavetti here, boys. Good day, gentlemen. Good day.